Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the Heikin Ashi strategy on TradingView, a powerful charting technique that simplifies price action and helps you identify trends with greater clarity. If you have ever struggled with market noise or missed key trend reversal, this strategy could be a game changer for your trading. Stick around until the end of this video to learn how to set it up, interpret its signal, and use it effectively to improve your entries and exits in the market. Now we start by understanding what the Heikin Ashi is all about. The Heikin Ashi is a unique charting method that helps traders identify trends more clearly. It helps us identify trends more clearly by reducing the market noise. Unlike traditional candlestick patterns or charts which draw raw price data each time period, the Heikin Ashi used a calculated formula to smoothen out price fluctuation. It used a calculated formula to smoothen out price fluctuation. This makes trend easy to spot and help you focus on the bigger picture on the charts. How does the Heikin Ashi work? Each Heikin candlestick is calculated using a formula. The open is calculated by the average of the previous candle's open and close. The close is calculated by the average of the current candle's open, high, low, and close. The high is calculated by the highest value among the current period high, open, and close, while the low is calculated by the lowest value among the current period's low, open, and close. This calculation creates a smooth appearance compared to a standard candlestick chart, making it easier to identify the trend. Now there are some key features that we need to know about the Heikin Ashi strategy. The first feature is bullish candle. Bullish candle typically indicates an uptrend. Strong bullish candles often have no lower shadows or wick, signifying strong uptrend momentum, while the bearish candle is a series of red candles usually signaling a downtrend. Strong bearish candle often have no upper shadow, showing consistent downward pressure. As you can see from the chart, this is a bullish candle showing a bullish trend, while this is a bearish candle showing a bearish or strong bearish trend in the market. While there is an indecision candle has a small body candles with long wicks in both ends. Those are the indecision candles. This is an example of an indecision candle. Small body with long wicks at both ends. In this area too, these are indecision candles. Why use the Heikin Ashi candlestick pattern? The Heikin Ashi is particularly useful for identifying trends and staying in trades longer by filtering out minor price fluctuation. It helps to provide a clear view of the market direction. This can help you avoid false signals and focus on high probability trade setup. Now let's break down a strategy. Let's break down the Heikin Ashi strategy. We have to break down how to use the Heikin Ashi to spot bullish and bearish trends, as well as how to determine entries and exit points for your trades. For a bullish trend signal, the bullish trend is identified when the Heikin Ashi candle are green and has no lower body wicks. As long as the candle remains green and the lower shadows do not appear, the uptrend is likely to continue. When we see series of Heikin green candles without lower body wicks, it shows that we are in an uptrend and the uptrend is likely to continue, as seen in this chart at this area. When trading a bullish trend, first of all, we look for price to pull back to a value area short as near a 20 period or 50 period EMA. So we are going to be using an EMA for this strategy. We'll be using an EMA for this strategy. Enter the trade when a strong green candle forms after a pullback. So enter the candle, we'll enter the trade the moment a green candle is formed after the pullback. Remember, this was the area we were looking at when price came and retested the chart. We would look for where we would see strong bullish candle above the indicator, above the moving average. This is a strong bullish candle and this is where we enter our trade. We place our stop loss just below the recent swing low to protect our trade. If we enter the trade after this, just below the recent swing low can be this area to protect our trade. This is how we enter such position. While for a bearish trend signal, it is a trend signal signaled by a red Heikin Ashi candle with no upper body wicks. With no upper body wicks. This is for the bearish trend signal. This shows that sellers are in control and the market is moving towards the downward direction. As long as the candles remain with no lower body wicks, with low upper shadow, the downtrend is likely to persist. This is an example of a downtrend in this area. Now let's see how we can take a downtrend. We wait for price to pull back towards an area of resistance which can be near our 20 period or our 50 period EMA. The 20 period is this blue line and our 50 period is the yellow line, and as we can see, price broke through the line and came back to retest it. This line is acting as our previous support that turned resistance level. So when price came back to retest it, this is exactly where we would want to enter our trade. We will enter our trade when we see a strong red candle forming after the pullback. A strong red candle forming after the pullback. Remember, this was the break, this is the pullback. So if red candle forming after the pullback and this is my strong red candle, we will enter the trade at that area. When we enter the trade at that area, we place our stop loss just above the recent swing high to minimize our risks. This is where we will place our stop loss. Now, in terms of an indecision and reversal, indecision in the market is often indicated by small body Heikin Ashi candle. We'll be seeing a series of small body Heikin Ashi candles with long wicks on both sides. This candle suggests that either buyers nor sellers have control, which could lead to a trend reversal. So be conscious during this period and avoid entering new trades until the market's direction becomes clear. This is a pure example of the indecision using the Heikin Ashi. Entries and exit points. To maximize the effectiveness of the Heikin Ashi, enter trades in the direction of the trend after confirming the momentum through clean Heikin Ashi signal. That is, in case of a buy trend, you enter when you see series of green candles for longs, and for shorts is when you see series of red candles. How do we exit our trade? We exit when we see signs of weakening momentum, such as opposing colored candles. So if I want to leave this trade, I will leave this trade the moment I see an opposing candle. That's this green candle opposing the red candles. This is when I will decide to leave the trade. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on the notification bell so that you don't miss out on more trading tips and strategies. Thanks for watching and I will see you in the next video.